So we're seeing a lot of hype in the critical minerals sector, the renewables and the battery metals market. We see reports on supplier shortages in metals like copper as an example. If we overlay the outlook of EVs and the increasing impact of decarbonisation, plus an extremely volatile geopolitical landscape, this amounts to a very challenging market to forecast. Do you have a view on the commodities that will weather this storm well and the ones that have a bright future for Australia?
Yeah, sure. So ultimately, in a long-term perspective, from a commodity viewpoint, a commodity demand growth perspective, it's really the smaller, more pure play markets like lithium, vanadium, cobalt and rare earths, and even the relatively tiny silicon and polysilicon markets that have much greater longer-term upside, almost driven solely by energy transition. For example, in many of these commodities, we see double-digit compound annual growth rates globally for the next 2 decades. Whereas conversely, in the much bigger commodity markets such as copper, we actually have a few percent compound annual growth. And whilst electrification is no doubt undeniably a positive for copper, and new projects will be required in that market, we actually see copper demand peaking in China over the next couple of years as its construction sector peaks. Even more starkly, in steel, we actually think China has already seen peak demand for new iron units. And hence, from a longer term perspective, it's these mix of relatively small commodity markets that are going to be much more important, growing importance for Australia, if the country is really going to try and maintain its export dominance in the commodity space, but also help drive global energy transition as well.
Excellent. Yeah, that's some really interesting research. Thank you very much, Alex, for the time and the insight.
Thanks, Daniel.